Traders are whispering that Cardano is about to explode. And guess what? Wall Street might have just quietly validated those rumors. I've got this gut feeling that something big is coming for ADA, and today I'm going to share why I'm doubling down on Cardano right now. I actually came across an article from Cardano feed on X, formerly Twitter, that hinted ADA was gearing up for a major move. The Cardano community was buzzing about it, and I have to admit, it piqued my curiosity. Could we really be on the cusp of a breakout? Let's dig into what's happening. Right now, Cardano's price is hovering around 41 cents, just bobbing between a rock and a hard place, support and resistance. It's like a spring being slowly compressed. You know it's going to snap one way or the other. In fact, the Bollinger Bands on ADA are getting weirdly tight. If you're not familiar, Bollinger Bands measure volatility, and when they squeeze together like this, it's often the calm before a storm. Imagine shaking a soda can. Pressure builds and builds, and at some point, pop. In fact, our Discord community, free to join, link in the description, has been buzzing about these tightening Bollinger Bands on ADA. Everyone's sharing charts and theories, and it feels like the collective anticipation is hitting a peak. Usually, when that many eyes are on a pattern, something ends up happening, one way or another. If you haven't joined our Discord yet, it's a great place to learn and not navigate this volatile market alone. Everyone's welcome, and the link is in the description. The key level everyone's watching is around 47 cents. If ADA can break above that, a lot of traders think it could rocket up to around 55 cents pretty quickly. But on the flip side, if ADA slips and can't hold its support in the low 40s, we could see a tumble towards 30 cents. Talk about high stakes. It's a bit of a make or break moment. This tight trading range actually reminds me of a pattern we've seen before. Cardano has had these long quiet periods followed by explosive moves. History doesn't always repeat, but it often rhymes, right? And here's an interesting twist. It's December, and historically, December has been pretty good for Cardano's trend reversals. I remember in past cycles, just when everyone was ready to write ADA off for the year, December came in with a surprise rally. It's almost becoming a crypto holiday tradition at this point. Santa Claus rally, anyone? It's not just the charts that have me optimistic, it's the bigger picture too. One major factor is the economy at large. The Federal Reserve has been hinting at possible interest rate cuts on the horizon. Why does that matter? Well, when interest rates go down, it usually means investors are willing to take on more risk since borrowing money gets cheaper. In plain terms, lower rates can be like pouring fuel on the crypto fire. More liquidity in the system often finds its way into assets like Bitcoin and Cardano. Since ADA often follows Bitcoin's lead, anything that pumps Bitcoin, like a wave of fresh liquidity, could give Cardano a nice boost. And speaking of Bitcoin, it's already been climbing lately, nearing new all-time highs around the approximately $90,000 mark. Altcoins like Cardano often lag behind Bitcoin's big moves a bit. So if BTC continues its uptrend, I wouldn't be surprised to see ADA wake up and start climbing in its wake. We might finally see the wind at our backs instead of in our face. And just to put that in perspective, the last time the Fed did a major rate slash, remember March 2020, we saw crypto go on an absolute tear through 2021. Now, I'm not saying we're getting a repeat of the 2020 to 2021 magic, but it shows how big of an impact easier monetary policy can have on Bitcoin and friends, and by extension, ADA. Then there are Cardano's own fundamentals, which are seriously improving. This project isn't just twiddling its thumbs. For example, Cardano is about to launch a new Midnight sidechain around December 8th. Midnight is designed to bring more privacy and secure smart contracts to the Cardano ecosystem. That means developers and businesses could build more powerful applications on Cardano, with an extra layer of privacy baked in. And that's not all. Cardano's developers are working on a layer 2 scaling solution called Hydra to massively increase throughput, so the network can handle way more transactions. Plus, Cardano is heading into its next era called Voltaire, which will introduce decentralized governance and let the community have an even bigger say in the network's future. In short, the project's roadmap is alive and well. Also, the Cardano community itself is putting its money where its mouth is. They recently voted to spend a whopping 70 million ADA on infrastructure development. That's tens of millions of dollars aimed at improving the network. To me, that says the community and the developers are in this for the long haul. Good governance? Check. Long-term vision? Double check. All these developments strengthen the faith that Cardano isn't a ghost chain. It's a living, breathing ecosystem that's evolving and maturing. In fact, Cardano already hosts a growing number of decentralized apps, from DEXs to NFT marketplaces, and it consistently ranks among the blockchains with the most active development communities. So if anything, the tech and builders are there. It's just a matter of the market waking up to it. So when you stack it all up, improving tech, community investment, and likely friendly macro wins, you have a recipe for something special. Cardano's foundation is getting stronger just as the market might turn favorable. That's a combination that's hard to ignore. Here's the icing on the cake. A major Wall Street giant just put Cardano in the spotlight. The Vanguard Group, yes, the $11 trillion asset manager known for its index funds, has effectively given ADA a nod of approval. How? Vanguard just made it possible for investors to get exposure to Cardano by adding ADA into the Bitwise 10 crypto index fund. In plain English, Cardano just got invited to sit at the top 10 cryptos table. This isn't some random altcoin anymore. It's now rubbing shoulders with the likes of Bitcoin, Ethereum, and other heavy hitters in a fund that traditional investors can actually buy. Think about what that means. When big institutions start recognizing a cryptocurrency like Cardano, it's a big deal for credibility. It's like getting a blue check mark in the finance world. This kind of inclusion can pave the way for more investment funds and ETFs to put a slice of ADA in their portfolios. That could mean more money flowing into Cardano, more liquidity, and likely more stability in the long run. It might even help smooth out some volatility over time as ADA finds its way into more long-term portfolios. Though, let's not kid ourselves. This is crypto. Some wild swings are here to stay. And, let's be real, when the big money starts paying attention, a lot of everyday investors feel more confident jumping in too. It signals that Cardano isn't just some fringe project on the outside of mainstream finance, it's stepping into the ring with the big boys. And it's not just Vanguard either. The US SEC recently approved a Bitwise 10 crypto index ETF, which also includes Cardano. Very soon, anyone with a regular brokerage account could gain exposure to ADA through that ETF as part of a basket of top cryptos. That's about as mainstream as it gets for an asset like ADA, and it blows my mind, in a good way. Honestly, if you told me a couple of years ago that Vanguard or an ETF would even acknowledge a cryptocurrency like Cardano, I might have laughed. But here we are. It just shows how far ADA has come in earning its spot at the table. With all these pieces coming together, I made a decision recently. I'm doubling down on Cardano. That means I increased my ADA holdings and my commitment to the project. Now, I didn't come to this decision lightly. Honestly, a few weeks ago, I was second-guessing myself. There were moments in this bear market where watching ADA's price slide was pretty painful. I mean, seeing it go from that approximately $3 high all the way down to under 30 cents at one point. You start to wonder if you got it wrong. I remember staring at my portfolio thinking, should I cut my losses? Is Cardano ever going to bounce back? But every time I had those doubts, I'd see an update from the development team or some new project launching on Cardano, and it reminded me why I got into ADA in the first place. That kept my conviction intact. The market was dull. ADA's price was doing a whole lot of nothing, and it's easy to get pessimistic. It's also worth acknowledging that Cardano isn't the golden child of crypto hype at the moment. Plenty of folks out there dismiss it, saying development is too slow or that it's a ghost chain. But you know what? That kind of skepticism often means the expectations are already so low that any good news can have an outsized impact. I've seen some of the so-called Ethereum killers suffer outages or huge setbacks when they grew too fast. Cardano, on the other hand, has been rock solid. No major network outages, no catastrophic hacks at the base layer. Its slow and steady approach might not win headlines every week, but it has built a pretty resilient foundation. Being the underdog that people underestimate sometimes sets the stage for a big comeback. But then I started seeing these signals, the chart patterns, the buzz about a breakout, the improving fundamentals, and even that institutional recognition. It felt like a bunch of puzzle pieces, all clicked together at once. Let me give you a quick flashback. I remember when I first started investing in Cardano years ago, back when ADA was just a few cents. People were calling me nuts for believing in it. Cardano was the underdog, slow and steady, and a lot of folks wrote it off. But then, in the 2021 bull run, ADA shocked everyone by shooting up to around $3 at its peak. That was a massive payoff for those of us who held on. If I had listened to the skeptics back then, I would have missed out entirely. That experience sticks with me. It taught me that some projects just take time to blossom, and they can surprise the world when they do. My intuition was telling me, this is it. This is the window you've been waiting for. Could I be wrong? Absolutely. I've been in crypto long enough to know that there are no guarantees. Cardano could fail to break out and slide down, or some curveball news could change everything. I'm fully aware of that. This might shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, disclaimer done. The point is, I'm managing my risk even as I double down. I've weighed the downside versus the upside. If ADA did drop to say 30 cents, yes, that would hurt in the short term, but it's a drop of roughly 25% from where it is now. On the upside, if ADA rises to just its next major targets like 50 cents or 68 cents, that's a solid gain. And if it really takes off to $1 or beyond someday, the payoff could dwarf the short-term dips. And remember, Cardano's last all-time high was about $3. We're currently under 50 cents, which is roughly an 85% drop from that peak. Even if ADA only climbed back to half of that previous high, it would mean a price around $1.50, or more than triple what it is now. That huge gap between here and the old high is one reason I'm willing to be patient. The upside, if Cardano truly delivers, could be massive. To me, that potential reward justifies the risk, given everything we know right now. And because I believe in Cardano's long-term vision, I'm willing to ride out any bumps along the way. I also remind myself that timing the absolute bottom or top is nearly impossible. And one more thing, I'm patient. I'm not in Cardano for a quick flip next week. I'm in it for the long haul. If it takes months or even a couple of years for ADA to truly fulfill its potential, I'm okay with that. I've seen how the biggest rewards in crypto often go to those who can weather the storms and stay invested in solid projects. Doubling down doesn't mean I caught the exact bottom. It just means at these prices, I like the odds. I'm comfortable holding ADA, even if it gets bumpy from here, because I see where this could go in a best case scenario. And if the worst case scenario happens, well, that's why I have my safety nets and strategies, which I'll get into next. Now, even though I'm bullish, I'm not going in blindly. I have a game plan for safety too. One lesson I've learned in crypto: always have backups and safeguards. For starters, I never rely on just one exchange. If you've been around during a big Bitcoin or ADA surge, you'll know exchanges can go down or freeze withdrawals right when you need them most. So I've made sure I'm signed up, KYC verified, and ready to go on multiple exchanges. That's my plan A, plan B, and plan C. If exchange A has issues, I move to exchange B. If that hiccups, I've got exchange C. It's a bit of extra work setting those accounts up, but trust me, when volatility spikes, you don't want all your trading options in one basket. By the way, if you're curious which exchanges I use, I've listed them on my website. And yes, those links are affiliate links that support the channel. Gotta keep the lights on, right? I've seen it happen firsthand. Remember when FTX imploded? People who only had accounts there were left stranded, even during heavy trading surges on other exchanges. I've seen withdrawals get suspended out of the blue. Those incidents drove home the lesson. You can't assume one exchange will always be reliable. The important thing is, don't get stuck because you put all your eggs in one exchange basket. Next, let's talk security. Not your keys, not your coins. It's a cliche, but it's true. I don't keep most of my ADA on exchanges at all. I store my long-term holdings on a Ledger hardware wallet, safe and sound offline. If you're serious about crypto and you haven't looked into hardware wallets yet, please do yourself a favor. It's like having a bank vault for your crypto that only you have the keys to. Just a heads up, always purchase hardware wallets directly from the manufacturer's website to avoid any tampering or fakes. I've literally heard horror stories of people getting counterfeit devices from third-party sellers. You do not want that happening. I have a link on my website directly to Ledger. That one's an affiliate link too, which helps support the channel. And the point is, whether you use my link or go on your own, make sure you get it from the source. Once you have your assets secured, you can sleep a lot better at night, no matter what the market's doing. While waiting for the big moves, I also make sure my crypto is working for me. For Cardano, that means staking. In fact, I run my own Cardano stake pool called Cheek. Yes, shameless plug, that's our pool's ticker. Staking basically lets you earn rewards just for holding ADA by helping to secure the network. If you have ADA sitting in a wallet and you're not staking it, you're missing out on free ADA rewards. In fact, well over 60% of all ADA in circulation is currently being actively staked by holders. That's a huge collective vote of confidence in Cardano. Most people would rather earn a bit of interest and keep holding their ADA than sell it. The best part, your ADA doesn't get locked away or stuck. You can unstake or move it whenever you want, and you always remain in control of your funds. It's a win-win. Your ADA works harder for you, and you support the Cardano network's decentralization at the same time. If you're not already staking, consider checking out our stake pool Cheek. I'll put the details in the description. And if you are staking with someone else but want to support this channel, you can always move your stake over to us. It really does help keep the channel going, and we appreciate it. Now, on another note, I've been experimenting with a new project that's got people talking, Unity Nodes by World Mobile and the Minutes Network. This isn't the main focus today, but it's a cool side hustle in the crypto space I want to share. Unity Nodes basically let regular folks like us participate in a decentralized mobile network and get paid for it. Think of it as running mini cell towers with old smartphones or small devices. You provide coverage or services, and you earn crypto in return. World Mobile's grand vision here is to connect the unconnected, basically bringing internet and mobile service to communities that don't have reliable access, using this decentralized model. So there's a real-world mission behind the tech, which is pretty cool. They call the access passes software licenses, and I managed to get one that gives me up to 200 device slots to deploy. I'm starting small with maybe 10 devices, like repurposed phones, just to test the waters. If it goes well, I can scale it up closer to that 200 device limit. And yes, my office is starting to look like a phone shop with all these devices plugged in and running. It's a bit funny to see, but if those little gadgets can earn me some Bitcoin or ADA every week, I'll take it. The rewards from Unity nodes are pretty interesting. I have the option to be paid out in Bitcoin, Ethereum, ADA, or even XRP. Personally, I'll likely take my rewards in BTC, ETH, ADA, and XRP. Because hey, it's a neat way to accumulate more of my favorite cryptos on the side without buying them outright. I won't go too deep into Unity nodes here, and I've talked about them in previous videos, so many of you already know the concept. Just know that I find it promising enough to put some time and money into testing it out. Of course, do your own research on it. It's not risk-free, and it's still a very new concept. I'll drop a link in the description to their light paper and a rewards calculator if you're curious. For me, it's just another way of staying ahead and trying to earn crypto passively, which fits into my broader strategy of having multiple streams of crypto income. Before I wrap up, I want to pause for a moment and emphasize something really important, something I wish someone had drilled into me when I first started in crypto. Knowledge is power, not hype, not signals, not random predictions on social media. Knowledge, real understanding. If some of the concepts we covered today, whether it's Bollinger Bands tightening up, the impact of potential Federal Reserve rate cuts, or even the mechanics behind staking, felt a little overwhelming, please don't beat yourself up. Seriously, crypto is one of the steepest learning curves out there. Even people who've been in the space for 5 or 10 years are still learning every single day. Markets evolve, narratives evolve, tech evolves, and if you're not constantly leveling up, the market will humble you fast. And look, that's exactly why we built cheekyschool.com. It wasn't some let's launch a course because everyone else is doing it kind of thing. It came from years of experience, trial and error, and yes, plenty of expensive mistakes that we'd rather you avoid. Inside the school, we break down trading, portfolio management, risk control, fundamental analysis, and more in a way that's actually digestible, even if you're just getting started. No jargon for the sake of jargon. No confusing charts without explanation. Just real education, structured properly, and designed to build confidence instead of fear. The best part is, you can learn at your own pace. Whether you've got 10 minutes a day or you binge an entire module in a weekend, it's all shaped to meet you wherever you are. And if you do want to check it out, the link is in the description, as always, and you can use the code YT50OFF to get 50% off any course. Shameless plug? Yeah, maybe, but it's also something I genuinely stand behind because education has saved me from so many bad decisions in this space, and I know it can do the same for others. Even if you never take one of our courses, just promise me this: stay curious, keep learning, ask questions, challenge assumptions. The more you understand, the less you'll panic when the market throws a tantrum, and trust me, it will. Now, to sum it all up, I'm doubling down on Cardano because I see a convergence of positive signals. The technicals are tightening beautifully. The fundamentals are improving in ways people aren't paying attention to. And even traditional finance seems to be giving ADA a subtle nod of approval. I've got my risk management in place, my expectations grounded, and my game plan clear. Could ADA pull back further? Of course, it's crypto. Volatility is part of the package, but could it also rip upward and catch everyone off guard? Absolutely. And for me personally, the risk to reward ratio makes it a move worth taking. It's not financial advice. It's simply where my conviction is leading me right now. But what about you? Do you think I'm completely mad for doubling down at this stage, or do you see the same setup forming? Drop your thoughts in the comments. I read every single one, and I genuinely enjoy hearing your perspectives. Sometimes the community spots things even I miss. One thing I can guarantee, the next few weeks and months for Cardano are going to be fascinating, maybe frustrating, maybe exciting, but definitely not boring. I'm strapped in for whatever comes next, and I'll keep you updated every step of the way. If ADA rockets to the upside, you already know I'll be here celebrating and breaking it all down for you. And if it dumps or stalls out, we'll talk about that honestly too. Not every move plays out instantly, and that's perfectly okay. We're in this for the long haul and the learning curve, not just the quick wins. So don't forget to subscribe for more updates, more analysis, and more of this journey. Thank you for watching, and as always, stay safe, stay focused, and most importantly, stay cheeky out there.